with an increase of about 14% after analysts raised the price target to $25 per share. SoFi remains in the spotlight as they continue to attract many retail investors in the market. Actually, it's not only simple investors like us who are becoming bullish on the stock, but also institutional investors who seem to be itching to gobble up shares. If that happens, SoFi will need to reach out to NASA because they're going to the moon. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and news. Whether it's a deep dive into the fundamentals or breaking news, we got you covered. If you guys like that type of content, don't forget to like and subscribe to be notified as soon as we drop new videos. We're trying to get to 2,000 subscribers by the end of the month, and we're currently at 1,487. Anyways, in this video, we'll go over all the reasons why SoFi stock is skyrocketing. For those of you who watched our videos when we were promoting SoFi stock in the $14 per share price point, I bet you're smiling now. Starting off with the Morgan Stanley rating and the possibility of institutional investors entering heavily into the stock. From its $14 price per share all the way up to nearly 20, SoFi stock is getting back on its feet, shaking up the fintech industry while patiently waiting until the bank charter approval. But not only that, analysts are now getting a hold of this gold. Just a few days ago, Morgan Stanley analyst Betsy Graseck just dropped a $25 price target, insisting that SoFi now holds the record of having the fastest growth in consumer finance. This was made possible because of their strategic execution as they continue to pursue the right target market, or simply the millennials or the Gen Z consumers. Well, at least when compared to other fintech companies. Please note that we are not financial advisors, so please always do your own due diligence. To start off, SoFi has been investing significantly in their lending segment, which is one of their top business segments. With their underwriting expertise, brand reputation, and customer service, SoFi is killing the game. When SoFi gets a new client, they get significantly more value from these clients due to the fact that once you're in the SoFi ecosystem, you are significantly more likely to use the other SoFi products. Like Anthony Noto said, SoFi's products are better when you use them together. As a result, SoFi's lifetime value of a customer is higher than their competition. SoFi has already doubled its customer base over the past year from 1.2 to 2.6 million, and Morgan Stanley expects SoFi to do it all over again and eventually reach 5.3 million over the next 2 years. This might not be the newest news, but if you didn't already know, well, now you know. The bank charter approval seems to be right around the corner, and on top of that, the student loan forbearance is soon coming to the end, which is huge considering it's one of the biggest revenue growth drivers of SoFi. Once this government ban expires, Morgan Stanley expects a 70% surge in student loan originations in 2022, while the bank charter approval could drive up to 10% in their earnings. Just last August, Morgan Stanley had a reported 53.42% increase in ownership of SoFi. In this month of October, SoFi shares increased by up to 20%, and as we already know, analysts have been really bullish on the stock. As mentioned, Morgan Stanley analyst Betsy Graseck issued a price target of $25, which is now one of the many buy ratings on SoFi stock. Remember that Jefferies and Mizuho Securities both began covering SoFi in September with price targets of $25 and $28. Let's take a look at tipranks.com, SoFi Technology stock forecast and price targets. SoFi's growth trajectory looks like that of a person on steroids. We bet you are all excited to hear about SoFi's third quarter results, and so are we. The second those results drop, we will be covering all that and more here on this channel, so don't forget to subscribe to be updated as soon as they are released. But no worries, since the long wait is almost over. The company announced that the third quarter results would be released on the 10th of November. According to Simply Wall Street, it's up 138% from a year earlier, with analysts expecting revenue of $255 million, which would represent a 10% increase from the second quarter. These analysts aren't the only ones bullish on SoFi stock. MeetKevin, who actually ran for governor of California, talked about putting $1.8 million into two fintech stocks. The two stocks were Affirm and SoFi. By the way, comment Cosmo down below if you think MeetKevin's new hair looks like Cosmo from the Fairly Odd Parents. Anyways, Affirm is also a fintech company, which was founded in 2012. Its buy now and pay later segment has been doing quite well. Bank of America calls it a mega app and has a price target on Affirm at $160 per share. This company is growing at a fast pace. MeetKevin covered where SoFi's revenue came from.
Most of their revenue comes from lending, which is kind of what Affirm does as well, but we're talking here home loans, student loans, retirement accounts, right? These are going to be a little bit different. So 19.1% of the revenue at SoFi comes from stocks and trading, 47% is loan originations and sales. That's pretty big. And something that's different between SoFi and Affirm too is that less than 1% of SoFi's revenue comes from their payment network. So SoFi has a little bit of that target where banks aren't looking right now, in my opinion, which is younger folks trying to start out their careers, get a house, get a student loan, build their wealth. And they're kind of pulling a Lemonade, where Lemonade Insurance is trying to attract millennials to then grow with them throughout life. So that way, if you get your student loan with SoFi, hopefully you'll get your home loan and you'll refinance and you'll do all that through SoFi.
We definitely agree with him on this, as typically it is younger people that are getting student loans and then need to refinance. This is usually how they get introduced into the SoFi ecosystem, and from there, they get the chance to use all of SoFi's other products like home loans, insurance, and more. Also, please note that we're not financial advisors and none of this is financial advice, so always do your own due diligence.
We've got, in terms of profitability, SoFi is expected to be profitable in 2022. In terms of sort of total average annual growth for these companies, you've got growth for both of the companies sitting around 40 to 50% in 2022. 23, you've got larger growth at Affirm, expected to be somewhere around 40% and closer to 25% for SoFi.
More and more analysts are issuing buy ratings on SoFi. It's only a matter of time till the big institutions start to take notice. Institutions have significantly more capital than your typical retail investor. So once those guys start to get into the stock price, we may go to the moon. Whether the stock price continues to trend up or goes back down, we will be holding SoFi for the long term, and we'll be continuing to add to our position every chance we get. That's it for today's video. Until next time, peace.